This is the final part of Trading 101, part 3, finding out how to overcome your mental block with market psychology. I am your therapist for today. Now let's dive in. All right, so what you gotta understand is trading is difficult, man. It's a hard, mentally deprived kind of world. Most of the time, you're gonna do it lonely, and it sucks to do it lonely. That's why I understand why people have these discords, right? It sucks to do it alone, and that's why we have these discords so people can do it together. I like the idea of discords like that, you know. So we don't have to do this alone. We're in this together, right? But it is lonely and it's hard, all right. So stay calm and focus. The market will reward the disciplined. You're disciplined, you're patient, the market will reward you. Trust me. All right. And there's two reasons of market psychology. Okay. Why emotional control matters when you're trading. We're going to be talking about that. And we're also going to be talking how to overcome them. All right. So let's get into this. So why emotional control matters. It's the first thing. Well, why it matters is because people can revenge trade. All right. Revenge trading is detrimental to you becoming profitable. Right. You're not accepting that losing is a part of the game, which it is. It's a game of probabilities. You flip a coin. You know, you can call tails. It might not land tails, but you have a probability that it will land. 10 times you can call tails. It'll land tails, but it also might land heads. It could land tails all the time. It could land heads all the time. It could land tails and heads 50%. All right. So you're not accepting that trading is a losing, or that losing is a part of the game in trading. That will get you to the point where you're just going to be revenge trading. Okay. You can't take being wrong. All right. I know, guys. I know. Everyone has an ego. Everyone has this idea in their mind that they can be right all the time. But when it comes to trading, you just can't. All right, the market sucks dick. Okay, and it can fuck you up, man. And you're gonna be wrong a lot of times, but that's okay. You have right risk management. You have correct risk management. And your strategy is good. It's okay if you're wrong sometimes. All right, but not accepting losing is part of the game. Can't take being wrong. Impatient. All right, patience is virtue. Everyone says this. Everyone who's successful in life says this. Patience is virtue, all right? You have a short-term perspective? No, you should have a long-term perspective. You should be looking at it as saying like, "Oh, don't look at your previous trade or your next trade. Look at your next 100 trades." All right? That's having a long-term perspective will help you out a lot. And then risking too much. All right? There's no point of a risk to reward ratio. There's no point of risk management if you risk too much money. That's gambling. Like I said in previous videos, it's just gambling. Don't risk too much. Risk what you're supposed to risk, which is mostly when day trading, 1 to 2% of your total account. All right? And then oversizing. So that's where revenge trading works in, all right? You get too angry and you start trading, you lose one and you get mad. I'm going to trade again. When I first started, I did that so many times. I'm not even going to lie to you. I got to the point where I was like losing so much money that, you know, I was getting money from family members, parents, my brother, elder, all of that. So don't do that, all right? Don't risk more than you're supposed to, all right? Don't revenge trade and just be patient, be calm. I know it's harder than done, and it is. Most of you guys are gonna be looking at this thinking, "Damn, this seems easy. I'm not gonna do this." You're gonna, because I thought the same thing too. But it just is. We're human. This is how it works. But just understand that this is what it means. This is how it works, and you can overcome that. Okay. But oversizing as well. You know, another term for revenge trading is you're trying to make up for those losses. Or just gamble. Right? On a gamble, you're gambling. So you're oversizing, you're putting too much, and you shouldn't be putting too much, all right? Taking profits early. So you're no confidence in your plan, and you're watching your P&L too close, okay? Most time when I'm in a trade, I'm on my phone, I'm petting my dog, man. I'm taking a drink, I'm smoking a cigar, all that. I don't, because I already, my risk is defined. My risk is defined, man. So I'm comfortable. I'm not watching my P&L too closely. I got alerts in most of the time. And I am very confident in my plan because I have a very high win percentage and very proper risk management. So don't take profits early, man. Be confident in your plan. Taking profits early just indicates that you're not confident in your trading strategy, okay? So, or you're putting in too much money and you get scared. So be confident in your plan, all right? That's why you get a good plan. That's why you find out your win percentage first, and then you start trading real money, and then you won't be taking profits early. You won't even think about taking profits early, okay? So just have confidence in your plan and don't watch your P&L too closely. Just, it's not the end of the world, all right? Just calm down. Then you also have overtrading. So overtrading is it's like revenge trading, oversizing. It's when you're greedy. You're trying to get rich too fast. You're in a green trade, you win, you won more than you're supposed to. Let's say something like that. You won a good amount where you're supposed to get out. In your trading plan, if you won that amount that you did win, you're gonna get out. You didn't follow your trading plan. You got too greedy, trying to get rich too fast. Nope. That does not really work. That's just over trading, man. You're over trading. You have no predetermined plan, or you're not, or you completely sway from your plan. You will end up losing bad. All right. So don't be greedy. Green is green. Money is money. All right. Take the money when you're supposed to take it, and don't over trade. All right. Take the money if you have enough, and if you're able to, when your plan trade again, go ahead. But if you're not supposed to, get out. All right. Stick to your plan. And it'll help you so much, man. I'm telling you guys this very specifically, very seriously, so you guys can understand, okay? But also, moving stops due to a gut feeling. That's too much overconfidence, all right? So have confidence, but don't have too much confidence, all right? Don't keep moving your stop loss to the point where your risk management is fucked up, your risk to reward is fucked up, okay? So you have no set stop loss, and you have a mental stop loss too. In day trading, never do that. In swing trading, like options, mental stop loss is fine, all right? I do that sometimes too on swing trading. That's okay. I have alerts set up. That's all right. But in day trading, movements can go too fast, man. Don't do that. Just have a certain stop loss or a limit order set in place to get out of your trade, okay? But that's why it matters. That's why market psychology, that's why emotional control matters. That's why being within and being calm and collected, being patient matters, because you'll end up doing all of this, and then you'll end up losing a lot of money. All right, I'm telling you guys this again from experience. I lost a lot of money. Don't be like me. I'm profitable now. I'm very good now. I'm very wealthy. I'm very set up now because I overcame all of this. I'm teaching you guys how to overcome all this too, so you guys don't have to actually, go through it like I did, okay? How to overcome this, all right? Remember, like I said, we are human. So identify it. Don't remove, all right? Understand what you're feeling in real time while you're there in a trade, all right? And adjust your rules to accommodate to them, all right? So fear usually means you're risking too much money, or you're unconfident. Don't risk more money than you should. And if you're unconfident, you're probably unconfident in your strategy. Make sure your strategy is set up. Make sure you figured out your win percentage. So if you figure out your win percentage, you're good. So make sure you're confident in your strategy. And how you know you're confident in your strategy is if you figure out your win percentage and you trade enough times to be confident in your strategy winning at a certain percentage, okay? So don't risk too much money, more than you should, and be confident in your strategy. Greed usually means you have too much of a short-term perspective. So don't look at it as the next trade or the previous trade. Look at it as the next 100 trades, which is why I always say define a win percentage, 100 trades, because that's when it actually matters, all right? So go in the long-term perspective, and that will help you a lot, all right? And revenge usually means that you're gambling. So when you revenge trade, overtrade, you're gambling, all right? It's just gambling because your risk management is through the roof. It's out the window. It's not there. It's just gambling, all right? You might as well go and put it all in red, at a casino, okay? So just don't revenge trade. Greed usually means you have too much short-term perspective. Have a long-term perspective. Fear usually means you're risking too much money. Don't risk too much money, or you're unconfident. Don't be unconfident. Determine your win rate and your strategy, and you're good. All right. Even if you have a 20% win rate, at least you're confident enough in your strategy that you have a 20% win rate. So you're confident enough to know that you're risking this much money to get this much money as well, right? And you're still confident in your strategy because you're confident that your strategy wields you a 20% win rate. All right. So, and also journal before you press buy. While you're in a trade, so you're going to journal before you press buy, journal while you're in a trade, journal when it hits your TP or when it hits your stop loss. And then, journalism is very important here. Most people don't do it. I think it's crucial. I journal most of my trades too, swing trades and day trades, because when you journal, you understand, and we're going to go into this in a second here on journaling, but you understand what you're doing wrong and it can help a lot, okay? But long-term mindset, okay? So with the long term, fuck it. Let me do the journal for you now, all right? Let me do the journal for you now. So with the journal, it helps you a lot because let's say you lose a trade. Let's say you hit your stop loss. Or let's say something happens, let's say you revenge trade or overtrade and you journal that. You understand why you did it. Because once you journal, you can understand what happened to the point, like what you did wrong, what you did right when it hits, let's say it hits your TP, let's say you're in profit. So journaling helps you overcome those things you did wrong and then it helps you understand what you did right. It helps you take away those bad things about your strategy and helps you implement those good things that you already have in your strategy, okay? So that's why journaling is very important. It helps you become better. Just like when you're trying to learn something, and just instead of just like reading it or watching it, you also take notes like the teachers want you to take. It's very good. You might have gotten bored with it because it was boring, but taking notes made it implement in your head better, in a better way, right? Because you're not only reading it or watching it and listening to it, you're also writing it. So the movement in your hand is making sure that, or the typing is making sure that you're getting it more of it into your brain than you would if you weren't, all right? So that's why journaling is important. That's what I think. But also have a longer term mindset. So the next 100 trades, like I said, your current, past, the next trade don't really matter. You could win or lose that one. You could go break even on them. It doesn't really matter, right? Next 100 trades, those matter. And forget about the money, man. When you're first trading, I like to say this a lot for beginners. Trade like you were trading if you had a paper trading account. It wasn't your real money. Trade like that, and if you put into your real money, you get to that point where I trade like that too. Because when I'm paper trading, I have a solid strategy. I traded more than 100 times to determine my win rate. I had solid risk management. I was only trading how much I should have traded, how much money I should have put in. That's how much money I was putting in. So I traded it exactly like I was trading a paper trading account because I was the same thing, but instead you're putting real money in, yes, but it's the same thing. You know what I mean? So forget about the money. Don't think about the money. Remove the P&L from the screen, when you're paper trading as well. And when you're real, and when you get into real trading, just try to do this, man. Remove your profit and loss from your screen. Instead, use ticks or points or levels, price levels if necessary, and trade the charts. That'll help you forget about the money, and that'll help your psychology a lot. A lot of people don't tell you this, right? But it's about the money. It's always about the money. That's where fear and greed come in, is because of the money. Trading, the most important thing why people do trading is to make money, which is why that's the thing. That's the thing where people get too fucked up on, is the money. They get too scared of them losing too much money or them making a lot of money. They get too excited and all that, right? So that's when they get greedy. So forget about the money, man. Don't think about the money. Remove your P&L from the screen. Just go trade in the charts, and you'll see how much better you actually are. And then go into each trading day trying to repeat the process and not make money. All right. So you win if you stick to your rules, not make money. That's better. That's how it's said. That's greatly put. All right, it's greatly put. You win if you stick to your rules, not make money. All right. So just go into trading. Like let's say next trading day. I don't know when I'm posting this out, but next trading day where you're able to trade, take your P&L from the screen. If you're simulated trading, which I assume and I encourage most of you should be, because since you're beginners and you're watching this video, but just remove your P&L from the screen. Don't even look at it. Blank it out, put it somewhere else, and use just levels, ticks, and just trade the charts. And you'll see how much calmer you are, once you get to like certain more times, like 5 times, you'll see, oh, not that bad. I'm trading the charts. I'm not looking at the money. It's great. And then once you get into the real money, it'll make it so much easier, all right? So much easier. And then overall confidence too, all right? To be able to master market psychology, you need to have full confidence that your setup work a certain percentage of the time. So this is why I tell you in my previous video, I told you my percentage of the setup wins. I told you my win percentage of each setup. That is what works, all right? So to be able to master market psychology and become calm, collected, and have patience, you need to know how good is your strategy. Because even if your strategy is 20%, at least you're confident that your strategy wields you a 1% rate of 20%, so you can use the win to reward ratio of 20%. So that's it. You'll become confident in your strategy if you know how well your strategy works. And this is why we need to back test until we can read setups like the back of our hand. I can read setups the back of my hand. I can do it in my sleep. I dream charts, man. I dream candlesticks because I've been doing this for years, brother. So back test, paper trade until you understand the market like it's the back of your hand. You understand the market better than you understand your girlfriend, all right, or boyfriend, whoever's watching this, all right? So just have confidence. The more confidence you have, the better you will be at trading, okay? And then my personal rules, all right? So I do, and this is never broken, by the way, never broken. 2 max trades a day. Whether I win, whether I lose. If my first trade is a good winner, I'm out. If I made enough money, I'm out. If I'm having a losing week, I size down until I build confidence back in my strategy, okay? And confidence just means win percentage, right? Look at confidence as win percentage. I'm confident that my strategy works this amount of time, this percentage amount of time, all right? Look at that. So if I'm a losing week, have a losing week and I have red trades every day in a week, I size down, I put less money in until I regain my confidence. Basically means until I regain my win percentage back up, until I'm good, all right? Then the checklist, all right? This is the checklist, simple thing here that I'm going to show you is remember, step by step, look at this step by step. Only trade key levels. Don't go wavering off, man, because you have an inkling. You know, you have your spidey senses telling you it's going to go up in some random ass spot. Don't do that. Only trade key levels. Only trade liquidity levels, supply and demand levels, okay? Pre-market research, find those key levels, find the volume that's going around these levels, these stocks, these indexes. So do your pre-market research, look up news, find out who's speaking, find out if there's unemployment rates, find out all of that, and before you get into or before the market opens, okay? Then write out your trading plan. Like I said last time, your trading plan should be stuck to every time when you're new trading, okay? Stick to your trading plan. That means entries, take profits, stop losses, indexes or stocks you're looking at. Stick to your plan. If your trading plan was to look at SPY, trade SPY if you see a setup, all right? If your trading plan was to look at Google, trade Google. Don't waver off from it, okay, man? Make sure, again, it collides with risk management plan. Make sure what you're risking in that trade is good with your risk reward ratio because you're making a certain amount based off your win rate percentage. So if you have a win rate percentage in your strategy of about like 60%, which was last one in the chart, 60%, that means you can make profit even if you have a one-to-one risk reward ratio. So you can risk $10 and make $10 and you're still in profit. But that won't work if you have a 20% win rate because you need to risk $10 to make $50 to be in profit. All right. So just make sure it collides with your risk management plan. Start small, size up when conditions get better. So I love saying starter size in all my trades. I stay in starter size for most of my trades because I want to make sure that I'm starting small. If something breaks out that's not going in my way, at least I only put a little bit in. And then I start adding more. When I'm day trading options, most of the times I start small. I put in starter size so I can add more once it dips down to a more level so I can get my average down to a better level, you know? But that's basically what I do, you know? You can put your full size in if you want to. Just know if you don't have as many contracts as you're able to put in, because I put in a lot of contracts. So I might put in, 25 contracts first, then 25 more when it dips down. So starter size basically, right? So yeah, start small, size up when conditions get better. Wait on confirmation. Like I said, my setup. That's your checklist for the setup. Wait on confirmation. Candle closed. That was your setup. There was a zone bounce candle. It was a break and retest closed above that zone. Liquidity sweep closed above that zone. Next candle, confirmation. You're into. Wait for confirmation. Don't get in too early. It's better you get in a perfect entry or a little bit of a later entry. Don't get in too early. Don't get in too late. Don't even get early. Not even a little bit early. Don't get in, but you can get in. You can get in late, a little bit late, but don't get in too late, and don't get in early or too early. All right. And 2 to 4 trades per day max. Mine is 2. Some other traders have 3, 4. Go with that. A low amount, less than 5. All right. Or 1 to 2 losses per day max. If I lose one trade, I better find a damn good trade to get into with a good perfect setup, an A plus setup trade for me to get into another one because I already had a losing trade. I don't want to do it. And if I do find one like that, I'm sizing in smaller because I don't want to risk more than I have to because I already have a losing trade. I already have a red trade in that day, all right? So those two are very important. Don't trade any more like less than 5 day trades per max, even if you are green. But if you have one loss, you better find a really good entry. Make sure you find a really good entry for your next trade, and make sure that you're not putting that much money in for your next trade. If those two don't collide in that day, then just take your one loss and you're good, man. Take your one loss and just get back up the next day, all right? But that is the checklist for that. And then after trades, all right? I'm pretty sure this is the last one. Yeah. So after trades, Track your trades. That's what it means by journals and everything like that. See which trades you won. See which trades you lost. So write down what you did wrong. Was it emotional aside, or was your strategy just did not happen because of probability, because your strategy was right but it went in the wrong way. So write down what happened. Write down emotions in real time. Write down what you were feeling. When that trade didn't go your way. Did you get sad? Did you get mad? Write that down. Did it go your way? Did you get too excited, way too excited? Write that down, all right? Because people think traders are robots. Those are good traders. Be calm, be still. You can make 3K. That was aligned with risk management. You're calm, you're still, because you shouldn't get too excited, because then you get too greedy, you lose 1K. Don't get too sad, because that's aligned with your risk management. You're going to get that back up. And because if you get too sad, you get too emotional, you get too angry, you'll end up revenge trading and over trading. So don't do that too, all right? So writing down your emotions real time when you're journaling helps you so much, okay? And then review. Compare plan to your execution. Was it the same thing or was it wrong? Why was it wrong? Why did you waver off? Then it'll help you not do that again, all right? So get familiar with emotions you experience in real time. The more, it's just experience, man. This is all experience, all right? I keep telling you guys this so you guys have an upper hand when you're first starting out, but it's going to be experience too, okay? So the more you experience the charts, your trading, the more you experience the market, you'll get familiar with the emotions you have, and it won't be as big of a deal anymore, okay? Because when I first started out, I fucking loved those days where I got like $100 in a trade. Amazing. Nowadays, I make like 4,000 a trade, 5,000, maybe even 10,000. I get happy, yeah, inside. Yeah, of course, I made money, right? But it's another day for me, all right? That's what I'm trying to tell you. More experience, you get more accustomed to making money and losing money. But yeah, man, that is everything that I have for the market psychology. The last thing that I have to leave you with for like this concept here is just take it slow, all right? I understand, I want the music to come down. The music to come down. Just take it slow. This is a serious moment, all right? Take it slow. Don't end up going too fast. I know you want to achieve your dreams in the matter of months or weeks, but that just won't happen in trading, all right? I'm not saying it's impossible, but 99% of the time, 99% of the people, that just won't happen to you, okay? Because if it does happen, then that was a gambling and you just got lucky, all right? But take it slow. Just understand that this is going to take time, like years, to be able to make the amount of money that you're dreamed of making, all right? And you can still have small dreams, you can still have small setting goals like, oh, I'm going to get a strategy that gives me a 60% win rate. That's a good goal, when you're paper trading. Get that goal set up, get a strategy that gives you a 60% win rate. Or I'm going to get from my account balance from 100 to 500 in the matter of months. Great, do that, man. That's a great goal. It's a very realistic goal in the matter of weeks or months. But don't think, oh, I'm going to go from $1,000 to $100,000 in a couple months. Likely not going to happen. Okay, so that's all I have to leave you with, is understanding that the more slow you take it, the more patient you are, the better outcomes you will see. And any of those traders who try to sell you a dream where you'll get rich quick, they're just lying to you to sell you something. I'm trying to sell you guys a realistic dream. You will become profitable. You will get rich if you put in the time and patience. And in years, it's going to take years, you will be making a lot of money. But now, the only goal I can tell you right now, the only dream I can sell you for the short-term dream is that if you stick to it in a couple months, you will understand how to trade and how to put in your real money, and you will understand how to be profitable in the sense of consistency. So you will you'll be knowledgeable you'll be experienced, you'll be good enough to make, $10 in a trade, depending on your account balance, $100 in a trade. That, yes, but it's going to take years to make a substantial, significant amount of money. If you understand that, then perfect. You're perfect for me, and I'm happy to help you in this journey, okay? So I'll be having way more YouTube videos going out, teaching you exactly everything I know from trading, and swing trading too, options, crypto as well, investing in crypto. I'll be doing that. I'll be teaching you guys everything for free. So you guys don't have to go and buy anyone's course or anything like that, and you can just stick with me and learn for free, all right? So that's basically everything that I have to show you and everything I have to tell you for this course, this Trading 101. I hope you guys got a lot from that. That is everything that I know when I'm using my strategy. Obviously, those more beginner to experienced traders will understand this more so than those really, really new beginners, like those noobs who don't know anything, who don't even know what candlesticks are. If you're watching this video, this might sound like gibberish to you, a lot of this, especially in the part 2, but just stick with me and I'll be doing a boot camp, from day 1 of learning literally what trading is, how to spell your own name, and then going all the way to the more complex stuff like this and even forward, okay? But yeah, man, that's everything I have for this trading 101. I hope you guys liked it. And yeah, stay tuned for more.